All right, guys, it's just been absolute chaos with NIO stock. I mean, it cratered all the way down to $7, and then they had earnings, and it just basically made a huge move up. But what exactly is actually going on there? What exactly did we see with the numbers with NIO? And more importantly, what is the future for NIO stock? So let's talk about all that today, right after you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And don't forget the flash sale is ending this weekend for my group, where you get to see all my buy and sell alerts in real time. You get to see my watch list with price targets. We got 5 courses you can take for free, tons of exclusive videos I release every week. We got the best group of 6 and 7 figure members out there. And we have a stock analyzer tool that's coming that's going to be completely free for members. So make sure you check out the pinned comment and get your spot now. All right, so, with NIO's earnings, there was some really good things. There was also some things that just, honestly, if I'm being quite frank, were not good at all and quite concerning. So what I've decided to do is I'm just going to play the video for you guys that I made for my group about a week ago or so after NIO's earnings call, to basically kind of break down everything that I thought, kind of give you guys my thoughts on that as well, since so many of you guys have been asking me about it. I thought about trying to rehash it and kind of trying to package it down into a different video, but I was like, you know what, let's just release that video there. I'll cut out some of the stuff that you guys probably don't want to hear and get down to the nuts and bolts of what happened on NIO's earnings call. So let's go ahead and play that for you guys now. All right, guys, so let's discuss NIO stock, kind of the earnings call, and kind of the future of the stock itself. And before we kind of even get started here, I want to make sure, especially we got a lot of new members, that I kind of caveat it with this. This is a speculative stock, whether we like it or not, whether we agree with it or not, whether you think it is or is not. That's my opinion on the stock there. This is very much the category I would put it in. And so refer back, this video I did, I believe, May 16th or so. So just a month ago or so, about speculative stocks, kind of how I view them, how I position size them in my portfolio, and all those other sort of things like that. And of course, my phone goes off, right in the middle of a video. Anyways, back on topic here. You just have to keep in mind when you're viewing this stock, it's not, Tesla. They're not highly profitable and, moving forward and expanding at a rapid pace. They're not at that stage yet. Not saying they can't get there one day or anything else like that, but they're not there yet. And even when I look at other Chinese stocks, just for comparables, I can't even really compare it to like a stock like Alibaba, because Alibaba is profitable. All right, so back on track here with the actual call. Of course, you guys all saw they had an EPS beat, which is good news. That's moving in the right direction. However, the revenue was way off, as we kind of expected. If you paid attention to deliveries, you knew revenue was not going to meet expectations. And then kind of the bigger thing that kind of jumped out at everyone, and I think triggered several of the big sell-offs the day of earnings, or the day after, anyways, after the release of the earnings, was the, gross margin number being at 1.5. That's crazy. And they didn't really, on the earnings call, give a really good explanation as to why. There were a couple things mentioned, but they didn't really deep dive it. Again, NIO's earnings calls are very different than, kind of like a Tesla's earnings call or something like that. So, there's just not a way to get a lot of good detail out of that. However, they said by next quarter, those margins should be up at 10% plus again. So that tells me, in terms of concern, it kind of alleviated that concern. Now, keep in mind, they have to execute to that. So next quarter, if they're not hitting that 10% margin, there needs to be a better explanation for that. And I don't understand why in a quarter, in terms of me, I would view that as a big negative, a red flag that I definitely should pay attention to, if they're giving quarter to quarter guidance like that and then not hitting that guidance. So, definitely something that kind of alleviated the short term, my concern right now in regards to the margin. Okay, the explanations given kind of made sense, but then that next piece is you got to hit that 10% next quarter there, so that way it does feel the story aligns there, and you're telling the appropriate story and giving the investors the appropriate guidance. Now, you guys know we've been talking about it. I've been, not happy with the cash burn overall. They've been spending a lot of money on brand and a lot of other things like that, expanding, the product line a lot, really, really fast. A lot of other things like that. So that's been, I won't call it, it's been a concern. It's been something I've definitely been watching. And to me, it was kind of, and they addressed this and they said they're not going to do it as much anymore. They're going to get leaner. They're going to get more efficient with what they do, basically bring that CapEx down. And to me, the best comparison here, not in terms of companies, so don't take it that way, is in regards to like Zuckerberg, with the metaverse. He was spending so much money. I didn't disagree with chasing the metaverse, because if it does indeed turn into, Web 3.0 or whatever the heck it's going to be, I don't think it's going to be anything that we can even imagine right now. So just kind of get whatever the heck he's shown and anybody else has shown out of your heads. I think it's going to be something we can't see. And I don't disagree with chasing that, especially given the amount of money that, Meta has for doing that. in regards to, moving into that next deal. It was just too much. He had his eyes off the main core business and was strictly focused on that. And more importantly, was spending too much money on that. And I kind of feel the same way. Yes, when you're growing, when you're a new growth company, you've got to spend money, not only expanding production, you've also got to get your name out there. Your marketing is important. Not everybody can pull the Tesla where you can spend no money on marketing and get yourself there. You got to have almost an eclectic, crazy person, kind of like Elon is, to be a CEO of that, to kind of draw attention to what you're doing, and to your brand, and kind of create that. There's not really a need to market because, hey, we got this guy over here. He's going to take care of all that for us, just by the sheer force of personality. NIO doesn't have that, and I don't disagree with trying to create the brand. Obviously, as we've seen, that's extremely, extremely important. I just felt like at times it felt like they were focusing on that instead of, basically expanding too fast. You can do that. You can expand almost too fast and create too many things. And I almost felt like sometimes the focus was there more than it was actual production, actually gaining efficiencies within your production, actually creating more revenue generators coming in, so then you can use that money to then go out there and do that. So it almost kind of, cart before the horse kind of deal was that borderline that I always just kind of felt like, man, I keep seeing, a new NIO house here, or, a new model, coming out there. And it was just, I understood why they were doing it, but a lot of times it was kind of like, sometimes you got to focus on the basics before you focus on a lot of the other stuff, or, kind of doing, instead of it felt like a 60-40 split the other way, hey, let's bring that other, 70-30, to the production side, and 30% on this brand growing and creating new models and all that sort of thing. It almost felt like just the ratio was off there. So that's something that they addressed. They said they would do. Again, something for us to watch as investors to see, do they get there or not? Are they going to perform to what they say they were going to do? And also kind of keep in mind, this isn't like Lucid where they're still trying to figure out how to scale and how to actually, produce models and everything else. NIO is kind of beyond that. Definitely not on the Tesla level or anything else like that. So please don't, draw those comparisons. But it's definitely not on that kind of, hey, Lucid's trying to get out of the starting blocks. NIO's definitely past getting out of the starting blocks range. They're struggling on kind of that next phase out of, hey, how do we build our brand, build what we're trying to do, but then get more efficient at the same time, drive down cost, drive down a lot of other things while you're also increasing revenue. And that's not what we're seeing right now. We're seeing costs go up in regards to, it's almost like, kind of counterbalance there. And now, at least on this earnings call, it feels like they've kind of turned that corner the other way to where it's like, hey, we're going to start paying more attention to this, to production, getting, more efficient, things of that nature, and less on kind of the brand and the other pieces, which is great. That's why you're seeing the stock run now, things like the battery swap, free battery swaps going away, some other initiatives like that they discussed. That's why we're seeing the stock run. That's why you're kind of seeing, I won't say Wall Street reward it, but it's extremely beaten down. It's at one of its cheapest price to sales ratios ever in the history of the stock. Not that it has a long history or anything, so it's relevant. It's not a long history or anything like that. But that's kind of, in terms of valuation, one of the cheaper valuations you could have gotten it at. And on top of that, they're saying some of the right things to get the, things moving in the right direction there. So that's why you're seeing the stock move. And, just kind of go to the battery swaps there for a second. I know a lot of folks don't like the battery swap. I don't disagree, especially here in the US. It's very, very hard because unless you live in like New York or San Francisco or, downtown, wherever, it doesn't really, that's kind of not how the US is set up. We are set up to spread out, and you have a home and you have your own garage and things of that nature. Other populations in other countries, and especially in cities, don't have that option, so you can't have a building with, 2,000 residents and then expect there to be 2,000 charges for everybody to charge their EVs. It's just not feasible in those types of areas. So the battery swap idea is great. Now it's going to turn into a revenue generator of some sort, along with cutting the price of the vehicles to kind of accommodate for the lack of battery swaps as well. So you kind of see Wall Street's kind of rewarding that. Kind of like, hey, look, they're lowering the price. Also not giving them free battery swaps anymore. So it kind of feels like an even trade. Lower price typically drives more demand. And that's kind of what Wall Street is seeing and kind of what they're betting on, kind of like on a base level there, along with some of the cost cutting initiatives and some of the other things like that. So that's why the stock is being rewarded right now. But let's kind of talk about the future here with NIO stock, because I think that's just as important as kind of what we're seeing right now and what we think is going to happen with NIO stock, because I want you guys to be prepared for it and not be shocked if it happens, or I'm sure YouTube will freak out. I know that's just what YouTube and the media and everybody does, but don't be surprised if they raise capital in the future through share dilution. Now, before everybody gets kind of wound up about it, it is very normal for a company in the growth stage to dilute shareholders. Elon diluted us after they were already profitable and printing cash and had billions in the bank, and he still diluted us as shareholders and may do it again later on to support further expansion beyond what his cash pile can actually, do. So it's not unusual to do that. And this isn't a situation like, I hate to say it, but the most recent one was Lucid. I'm not picking on Lucid today. It's the most recent example. Lucid's, doing that and diluting shareholders in order to keep the lights on because they can't figure out production. They can't get out of the starting blocks per se. So they burned through all the money on IPO that should have been enough to get them out of the starting blocks. Now they're having to dilute to continue to keep themselves out of the starting blocks, especially if their backing doesn't come through with extra cash infusions. And that kind of leads me to the second part of NIO, that don't be surprised if the Chinese government plays a role at some point in time and NIO's, helping NIO out and helping NIO be successful. And you just kind of have to get the idea of the Western world or how things work in the US out of your head completely. And it's kind of funny because people will complain about the CCP helping out Chinese companies when our government does it all the time. They just choose to do it differently, right? So sometimes they actually do just hand them flat out money. But there is a mechanism to pay it back so that way there's accounting and things of that nature. China doesn't play by the same rules. We can say it's fair, unfair, right, wrong, whatever the case is. It's kind of baked into the, Chinese discount per se on Chinese stocks. But hey, the Chinese government could give them a check tomorrow and not make them pay it back. Just go, hey, here's money. Hey, here you go. Congratulations, you're a Chinese company. Here's your free check. That benefits us as shareholders, obviously, but it's something that is outside kind of what is normal and really, really fits outside the norm of an American company. And in regards to thinking of that as an option for an American company, you just don't think that way. You just don't. Now, of course, like, if you're invested in one of the major banks like I am with Chase, hey, or JP Morgan, you're going to get a bailout per se, right? They're always going to be supported. They're always going to receive money to function. Now, that they have to pay it back, yes. There's all kinds of strings attached to it, of course. But that exists here too. But it is absolutely feasible the Chinese government could give them money, some sort of support, tax, whatever's. It's not like the US hasn't laid out a blueprint in order to help companies thrive and succeed. It's absolutely out there, and the Chinese government they can create something completely new that nobody's ever heard of. And then it's up to us as investors to figure out, is that a net positive for the company or not? We can discuss fair, not fair, anything else, doesn't matter. That's the reality with Chinese stocks. That's the reality with NIO here. And those are kind of some things that I could see happen in the future in regards to, now they got plenty of money. It's like 5.5 billion, something like that. And especially if they continue to lower their cash burn each quarter over the next, 2-3 quarters, great. That's absolutely can work. And will make that mechanism not necessary unless you're going to go with wildly larger expansion plans or something like that. Might be the only reason why they may need that cash, but it's something I wanted to put on your radar there so you're not surprised if it happens in the first place. Now, the only other future thing I kind of wanted to touch on here, and that was profitability. And there is no guidance to it. They basically keep saying it's a year away, but it's kind of like, it has not quite as crazy as Elon with FSD being next year, but it kind of feels that way. It's kind of like, hey, we think we're, within a year or so of profitability. They've been saying that for a year or so now. So they're behind the curve on that, and it's not formal guidance. So they're not going to get dinged by Wall Street for not hitting it during that time frame. However, us as shareholders looking for something to go off of, you can plan on 2024. But for me, that would be kind of a surprise. They need to show me that they can execute to that point by 2024. Don't care about the rest. I don't care about a narrative. I don't care about my wishful thinking with NIO. Of course, I want NIO to succeed. I stand to make a lot of money if they do. But however, they need to show me. And until we see multiple quarters strung together to where that EPS number that loss continues to get smaller and smaller and smaller, and they're able to consistently grow revenues more and more and more, they're a ways off from profitability, and a year is, kind of a pie in the sky projection. So that's kind of my thoughts overall with NIO's earnings call. Make sure you take advantage of the Father's Day flash sale that is live now for my private group, where you get all those buy and sell alerts, you get my watch list with price targets, you can take 5 courses for free. We actually have a stock analyzer tool coming very, very soon that's going to be completely free for members, and a ton more. Just check out the pinned comment down there and see if it's right for you, and make sure you take advantage of this sale before it goes away. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.